Hi guys, welcome to another TPFX weekly Forex Outlook review video. We start off exactly where we left off last week with Euro USD. This analysis remains unchanged. As we said last week, the week previous, this pair saw the bulls show up in force. We punched directly out of our trend line. Last Sunday, we said we were expecting the pair to see some kind of corrective pullback, which is exactly what we saw over the course of last week. We can see we've got 5 days here of corrective movements, dropping us back down to around the 110.70 mark. As we can see, this area, 110.74, it's remained a key area for this pair over the last few months. We've got lovely support here, lovely support, convert back to resistance just here. We've then punched beneath, thrown the pair through the trend line. We're now back at around the 110.74 area. This is a key area for this pair. I think I'd like to see which way it's going to go. My expectation is that the bulls are going to show up again mid to late next week, and I think that we are looking for a climb to around the 112 mark. At some point we need to keep an eye on it. If the pair does close, if any of our day candles do close beneath this area, I'd be looking for a short down to our trend line. If we do indeed confirm rejection, I think we're looking for a climb back up. We can't forget that we are also, if we zoom out, in a phenomenal descending channel. So we need to bear that in mind, that we're actually sat near enough in the middle of that channel, so the pair's got space to go either way. So as I say, I think the 110.74 area is going to remain key for us to decide where this pair is going to be moving next week. But I expect us to be getting some nice long positions on this pair from probably late Tuesday, early Wednesday. US dollar Swiss franc, we obviously jumped in last week. We got involved around this area. We were looking at this area of interest here. We've got quite a lot of choppy movement on this pair. Obviously, this area was punched straight through, so I'm now looking at the 99.5 area of resistance. We can see that the pair has failed to close above this area on Friday, so I'd be expecting to see a retrace on this pair relatively early next week, back up to around the 99.5 area, at which point I'd expect to jump in a short position, and we can ride it down to the 98.4 area. We have definitely got a level of interest here. As you can see, I think we can just move that down a tiny bit. So we're going to be looking to place our TP1 just here. We can then go for a more ambitious TP2. We can clearly see that there's some kind of action going on in this pair around this level. So we'll then be looking to get our TP2 about here. Obviously, at which point we're going to be in the trade risk-free, hopefully. So it's not going to matter too much, but I'd be expecting this pair to be bearish for next week. So Euro Japanese yen, let's just get our market structure mapped out. We've clearly got a descending channel that has been respected for a considerable amount of time. We can see up here we've got a tap, then we have resisted with another tap, and we have clearly broken through this channel. So we have now converted our upper trend line from a resistance to a support. We'll map out what could potentially be a new channel forming. However, I feel that we do need to be careful. This pair has been so bearish for a considerable amount of time that we run the risk of this actually being just a false breakout and smashing straight back into our descending channel. We can also see we've got an area of interest around the 121 mark that the pair last week has rejected from again. We failed to close above this area. I think our two areas of interest for next week are going to be the support that we clearly have forming at the 120 mark. We can see that we have supported the price and then rejected again. What I feel is probably more likely is a retrace to around the 119 mark, 1192-ish. I'd be looking, my eyes would be firmly planted in this area and this area, and I think that we're looking at longs. We need to be patient because naturally at the moment there's a considerable amount of room beneath, more so than there is above. So I think that the bearish movement early next week to mid next week is very likely. But for me, I'd like to be patient and await a retrace to this area of support before we consider jumping in. And I think it's likely that we can take that up to the 122 mark. We can clearly see that we've got an area here that's supported the price, and we just map that out as well, and then it's resisted again. So I think that that's going to be what we're looking for late next week, is an entry around the 119 and a target of around 122. Probably looking at a few weeks for this one to play out. If, of course, this isn't indeed a false breakout that we are looking at and getting back into the channel. If we reject around the 119, my next area of interest is naturally going to be with our trend line, to see what the pair does back at the trend line, whether it rejects or whether it crashes straight back into the channel. That's going to be the decisive factor in what we look at doing with this over the next couple of weeks. Let's take a quick look at gold. I know a lot of you love trading gold. We've clearly got an area of support. We're clearly in a flat channel at the moment that the pair's been in for a considerable amount of time. We've seen a few breakouts, nothing really to write home about, nothing really to warrant us getting involved properly, long term at least anyway. We're still within this channel. A lot of guys are drawing attention to this trend line that we can see we've got multiple taps on, and on Friday we have clearly closed above this trend line. So a lot of people are expecting a retrace to this trend line before the pair continues its way up. I don't necessarily believe that to be the case. For me personally, I still think that we're with the bears for next week. I would like to see this pair close beneath the 15 mark and the close of the New York session on Monday. And I still think over the next 2 weeks, potentially, we're looking at this pair dropping as low as 1460, potentially even 1450. There's no doubt about it that this pair, the power is with the bulls in the long term on this pair at the moment. I just think they're making the retail traders' lives too easy to carry this pair upwards from this level. It's too obvious. They want the stop hunts, and they're going to want all of that. You can see the lovely wicks that we're getting at the top to trick people into it. I think that we've trapped some buyers in here. We're looking at a drop off over the next week, but as I say, for me, the key decisive indicator that I'm going to be looking at is where this pair closes on the close of the New York session on Monday. But I think that we're looking at a close beneath the 15 mark, which to me will then warrant waiting for some retraces, looking at the price action, getting into the closer time frames, hour, 4 hour, potentially even jumping into the 15-minute, and looking for some taps on this trend line to see if we can at least enter a position back down to the support around the 1480, 1485 mark. But I still believe over the next 2 weeks we are going to see 1460, 1450 before the pair is taken control and the bulls carry the pair up to around 16 for the end of the year.